Happy Monday, everyone. Donald Trump is feeling pretty good today because he was able to, on Sunday, announce that Scott Bessent, Treasury Secretary, and U.S. Trade Representative Jamieson Greer had reached a significant deal with their Chinese counterparts as they negotiated in Switzerland over the weekend. So Trump spoke this morning at a press conference that was actually focused on this drug price rollout, executive order rollout that he announced on Sunday as well. But he addressed, first of all, the deal with the Houthis. He addressed the release of Idan Alexander, the hostage whose release he secured in a negotiation with Hamas. And he also addressed this major deal that was reached with China. Let's go ahead and take a look at the clip.
In addition, yesterday we achieved a total reset with China. After productive talks in Geneva, both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the largest structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs.
Okay, now Treasury Secretary Scott Bessent was also on Morning Joe Monday after the Sunday announcement. He came out before Trump actually spoke, but I want to roll this clip of Bessent because he uses the phrase strategic decoupling. And I think that's really important to kind of load in our heads as we look at what this deal, the contours of this deal actually are. So let's take a look.
China can become more open to American business, and the things that are sold into the U.S. Can not have the same level of subsidy. And no one wants to do a generalized decoupling, but we are going to do a strategic decoupling because we realized during COVID that efficient supply chains were not secure supply chains. So with steel, with semiconductors, with medicines, with a couple of other strategic categories, we are going to have to become self-reliant again.
Well, recession concerns are making headlines again, and experts, of course, are paying attention. Jim Walker, the economist who predicted the 2008 market crash, recently said he'd be amazed if a recession can be avoided. For those in or nearing retirement, this economic uncertainty is a real concern, very real. When the dollar declines and markets become volatile, traditional retirement strategies can be exposed, unfortunately. That's why more people are exploring gold IRAs. It's a way to include physical gold in your retirement portfolio. Historically, gold has maintained its value during recessions and periods of inflation, offering a potential hedge against economic downturns. This video is proudly sponsored by Augusta Precious Metals, who've put together a free gold IRA guide to help you understand how it works, why it matters, and whether it's the right fit for you and your financial goals. Gold IRAs are specifically for funds that are already held in a qualified retirement account like an IRA or a 401k. Big thanks to Augusta Precious Metals for supporting this video and for making this resource available for free. If gold is piquing your interest, you can download your free guide by clicking the link below. Now I'm going to pull up this CNBC article that has some key points that I think do a really good job outlining what this deal actually is. So first bullet point says they agreed to suspend most tariffs on each other's goods in a move that shows a thawing of trade tensions between the world's two largest economies. Just going to follow up on that point quickly by saying the Liberation Day reciprocal tariffs that Donald Trump announced against China were 34%, and then everyone remembers those just kept going up, and then China goes up. So CNBC continues to say the deal means, quote, reciprocal tariffs between both countries will be cut from 125% to 10%. So the US's 20% duties on Chinese imports relating to fentanyl will remain in place, meaning total tariffs on China stand at 30%. Now, Bessent said in a news conference, we had very productive talks, and I believe that the venue here in Lake Geneva added great equanimity to what was a very positive process. Stocks this morning, you will not be surprised to learn. Let's just take this ABC headline and put it up on the screen. They say The stock soared. The headline is "Stocks Soar as U.S. and China Agree to Slash Tariffs." This is as of the time that we're recording. The Dow Jones climbed 1,005 points, so 2.4%. S&P is up 2.7%. NASDAQ is up 3.8%. ABC News picks out Best Buy. They show that Best Buy saw its shares surge, quote, more than 10%. Tesla actually jumped more than 5%, according to ABC News as well. So let's get into whether this is a win for Trump or a capitulation. I think that's an important question. Charles Gasparino of Fox Business, has been very sourced in the administration, especially over the course of this trade war. He's gotten a lot of really good info from his sources in the administration. And just earlier this morning, even before markets opened and before Trump spoke, Gasparino got out there with this post on X that went fairly viral. He said, "Breaking: Trump raised tariffs on the world, the markets, particularly the bond market, and the market rebelled. Trump was then forced to back off. End of story. Film at 11 of the president spinning this as a major victory." Okay, sorry, I couldn't help myself, but what we have seen is a little lesson on how markets exert their power, how when you have to depend on them, as we still do, and he adds, when you have to depend on them, and remember, it's really the budget deficits that causing the trade deficit, and we need the budget deficit to maintain our standard of living. You can't go to trade war with the world without bad stuff happening. Now, certainly that's a good point, because Donald Trump himself said it was the bond markets getting a little, quote, yippee that made him back off those fairly extreme, radical reciprocal tariffs that he rolled out on Liberation Day. So Gasparino is just spitting facts here. First and foremost, yes, the market did dictate a lot of this, and the market is reacting now. But to remain consistent, the Trump administration should be careful to tout the markets, because when the markets were plunging after Liberation Day, a lot of people in the Trump administration made the legitimate point that the fate of the average American and of many working class Americans is not as tied to the stock market as it is for as other Americans are. Now, this wealthy Americans, particularly upper class, upper middle class Americans, are. Now, to be clear, it doesn't mean that the stocks don't have any influence over the fortunes, the jobs, the debt that, working class Americans, middle class Americans, and low income Americans hold. Of course, it's absolutely true that the market still has some influence there. It's just not the same. And that was a point the Trump administration was making when the market was plunging, and it should still be a point that they make now. But Gasparino is here getting at a really critical question. Was this ultimately a win for Donald Trump? Because now MAGA world is out here saying this is the art of the deal. And the MAGA haters, MAGA skeptics, and Gasparino, he's got a lot of sources. I think he's open-minded about MAGA, but he's certainly a free trader, saying that this is a capitulation. This is Trump getting owned by the markets. Now, Gasparino also posted, in talking to sources who run small businesses, the pause with China came just as their companies were on the precipice of disaster, since they source so much of their material from China, and the containers coming from China were coming back empty. If you want to know why we're as desperate for a deal as the Chinese, it's because small businesses, a key MAGA constituency, were about to get crushed. Absolutely. No question about that. We're also on the precipice of that. Let me just say another point of criticism here is that this is a 90-day pause. Once again, a 90-day pause. We do not know where this goes in another 90 days. We do not know where this goes tomorrow if tensions suddenly inflame again. There is a brewing potential military conflict over in the South China Sea. Just last week, Republican lawmakers were raising concerns that China was installing surveillance abilities on Cuba. These are two countries with a lot of tensions simmering between them. So we really don't know. 90-day pause, that's part of the problem with the way this trade war has been conducted. I'm someone who's in the camp, you've probably picked this up, you've been watching us, that it is directionally positive. The Besant's idea of a, quote, strategic decoupling, I completely support that. The execution, we still don't know from my perspective whether it's done more harm than good. I look at this. 90-day pause and I say, okay, I still don't know how to assess that. I still don't know in the cost benefit analysis if the cost of the execution is worth the benefit of the strategic decoupling. I still don't know what wins out in that equation because there's still so much uncertainty. And uncertainty is what is so difficult for those small business owners that Gasparino mentioned and for investors looking to bring business back to the United States, looking to reshore, onshore, or nearshore. Now, what's also uncertain is whether Donald Trump is going to be able to pass this massive reconciliation bill. We've talked about this here, although it's getting kind of missed in other corners of the media. That reconciliation bill contains a bit of industrial policy. Not in the form of spending, but actually in the form of tax incentives. So write-offs, 100% write-offs, backdated to January 20th, for building, manufacturing, factories, all that stuff. So there you have it right there. If you drop the corporate tax rate from 21 to 15%, as Scott Bassett wants to, you can see how some corporate headquarters, although how many jobs come back with it is an open question, would return to the United States. And they see tax cuts as just juicing business and bringing investment back to the United States. And for understandable reasons, that would be a real shot in the arm for the efforts to onshore. But that bill is hanging in the balance. It's being hammered out right now in Congress, but Republicans have razor thin margins. Whether it's able to get through Congress is a big open question. And just another quick point on the question of certainty. It sounds completely quaint and naive to say this at this point because both presidents from both parties now wield the tariff power. But really, this is a power that was constitutionally, for the most part, broadly supposed to rest with the Congress. And one of the benefits of that is you just have a higher level of certainty that it doesn't become almost a king like system where the whims of one person can reshape the global economy for better or worse. It just makes the certainty of investment really difficult. Now, we have said this from the beginning. Donald Trump saw the importance of America as his. Let me put it this way. Donald Trump saw America's importance and in its ability, America's ability, let's put it this way, to spin the world into economic chaos as a point of leverage. And that is tied to the argument we were just discussing about the stock market, that Donald Trump believes stock markets are sort of, they're Scott Bassett and Donald Trump believe that the sort of tether between stock markets and the financial well being of the average American is not what a lot of the media depicts it as, that the average American can afford some serious stock market fluctuation. And in the meantime, Trump can bring his enemies, or I shouldn't say enemies, sometimes allies in this case, but can bring other countries sort of to heel because they rely so much on the United States. And this is why I'm curious. We're going to get a lot more reporting coming out of Lake Geneva about what really happened when it comes down to the deal that was struck. And again, 90-day pause. We'll see what happens going forward. But uh, it was China reacting to the United States being closer, maybe than people realize, with other countries to their own trade deals. Because listen, if Gasparino sees this as a capitulation on Trump's behalf, well, China also had hiked a reciprocal tariff very, very high, 125%, right? So that had shot up as well, and China was claiming all of these, or China and its defenders were claiming all of these major victories, making deals, getting closer to deals with other countries because they offered, according to those defenders, more certainty. And it's possible that China was reacting to the Trump administration coming really close to making good deals with these other countries, places in the region. If you think like Japan, Vietnam, Cambodia, countries like that, that rely a lot on the United States and could benefit from an even closer relationship with China. Uh, I don't know. Maybe that was part of this. I'm really curious because the details of these deals have been sort of difficult to come by. And that could mean the Trump administration is really close, or it could mean that the skeptics are right, that it's a lot of hot air and a lot of public flexing to, maybe give the markets a little bit of certainty, to maybe pressure whoever else is negotiating with you into making a deal. Or it could mean that these were really legitimately close deals. We saw some good conversations with the UK, a little bit of good conversation with the EU, although that was looking quite bleak. And there's India, and there was some stuff on the table. So we'll see where all of that goes in the future, in the near future. But the idea of and this is a really interesting development. The idea that Trump seems to be moving closer and closer to just having a permanent 10% tariff. That was shocking when people were proposing it, really before Trump took office. Free marketers who saw people like Orrin Cass, American Compass, some like new right uh, Trump aligned people recommending a 10% global tariff. This was treated as insane. And now it's almost like a source of relief that it's just 10%. Uh, Again, let's just emphasize this is still a pause. Everyone else is still on pause. We do not have a an explosion of actual inked deals with other countries. This is a sign that the Trump administration is serious and is able to make some substantive deals, that they're not just trying to, again, flex on other countries and bring them to the table and then embarrass them and go on their chaotic merry way. This is a sign that the administration is serious about, quote, strategic decoupling, as Scott Bessent said. So maybe this bodes well for other agreements. Maybe things are thrust into chaos again over the course of the next 90 days, the remainder of the 90 days on the other reciprocal countries. So there's still a lot that is unknown. This, I'm not prepared to call this a capitulation, to be honest, until we see the rest of the 90-day process. I do understand what Gasparino is saying about how this was the markets, quote, exerting their power, and Trump responding to that exertion of power over the markets. Now, say the bond markets hadn't gone, quote, a little yippy, as Trump said, what would he have done? I don't really have that counterfactual. I don't know. I mean, it seems like it was always obvious that that's what was going to happen to the bond markets. And I would imagine Scott Bessent and probably even Donald Trump himself would have envisioned a very likely scenario that looked exactly that saw the markets responding basically exactly as they did. So I have a hard time believing they didn't predict that, or at least expect it to be a significant possibility. So I don't actually know whether or not that's what changed the Trump administration's course of action on all of this. And I don't think we've yet to see what they or how they're going to respond over the long term. And listen, other countries, China especially, are able to operate for whatever reason. And I'm not talking about the merits of this, but they operate on a much longer timetable. They are constantly planning, strategizing for 100 years into the future, not just a year into a future or a month into the future. And part of that is not having the same democratic system that we do, where there is upheaval in two-party leadership constantly. And so we don't know what to expect from another president. We don't know if another Democratic president comes in. Do they go back to tariffs that look like Joe Biden's? Are they even more free markety than the Trump administration? They're more libertarians. I don't know. It just there's so much that's unpredictable right now, and the tax bill is unpredictable. The geopolitical and military tension is unpredictable. So there are a lot of pieces to this puzzle. And it's tempting to say that we just sort of slotted them all into place, or almost all of them into place. But I still see a lot of floating parts here, and am not willing to come down definitively, or honestly even confidently, on one side of the cost benefit analysis or the other, because there's just so much further to go. So again, tempting to either slot this into the L or W column for the Trump administration, but when it's a 90-day pause, the other deals are outstanding, and even the tax bill itself is outstanding. What it'll look like, if it gets passed, what might need to happen in negotiations for the bill to get passed. All of these are just massive open questions. So, on the one hand, I'm hesitant to say that this is a big L for the Trump administration because I think their goal has just been, we said this from the very beginning, from literally from Liberation Day, that I think their goal is to sow chaos because that just reflects on the US's leverage and they don't necessarily have a particular end goal in mind. I don't think Donald Trump had an ideological commitment to 145 or 125% tariffs on China. I just don't think that's the case. I think he wanted to, change the relationship significantly. And if this stands, he probably will have changed the relationship significantly in a more protectionist direction. But I don't know that that's going to happen. I don't know that's not going to happen. There's just so many outstanding questions. And I think a lot of the media wants to see it in black and white, one way or the other. And to be honest, I'm not comfortable doing that right now. And that's why it's sort of, I think, helpful to talk these things through. And I'm curious what everyone else thinks. So we'll be covering this. We'll be back here with more. We're going to be covering this really closely. So make sure to stay tuned. You can subscribe at undercurrents.tv for a premium experience of the show, by the way. You get to email us questions if you're on the premium community. You can also get a weekly email from me, a weekly newsletter from me, and you get premium paywall episodes of the show. So undercurrents.tv, we'd love for you to join us there. Make sure to subscribe wherever you get your podcasts and on YouTube if you'll watch us there. We appreciate you so much for being here. We'll continue covering the story closely. And before I run, I just want to say I have a small bone to pick with the White House because I was a new media pooler yesterday. I had White House pool duty yesterday for the new media slot. And I think it was one of 5 days, maybe. That's just a guess. I don't have like an exact number where Donald Trump has just like not had, they called what's called a lid before the call time. And that means that basically the pool doesn't have to do anything that day. And then all of this news broke throughout the course of the day. And Trump wasn't, coming back from Mar-a-Lago or from a golf trip. So he didn't have any interactions with reporters. And that's my bone to pick with the White House. It would have been, it's not really with the White House, it's with Trump's schedule. So Trump should have golfed yesterday. It turned into one of the few days where there were if you were in pool, you didn't really get much, you didn't really get too much out of the whole experience, like talking to advisors coming in and out or all of that. And yet it was such a busy and consequential news day. So next time, fingers crossed, there'll be a little bit more going on, at least in front of the cameras, in front of the press. But what a crazy day. So we will be covering all of it. Make sure to stay tuned and we'll see you back here soon.